Perfect. Thank you, everyone, for logging on today. Hear about our Q4 quarterly operating results in the year ended December 31st, 2025. I will note just at the top, and we'll go into it in a little more detail, that we did adjust our fiscal year. So there is going to be a bit of a mismatch between some of the numbers on calendar and fiscal. So please keep that in mind as we go through it. With me today is our CEO, Charles Funk, our CFO, Vitalina Lisoon, and our COO, Greg Bush, to give you the full update on the quarter and our path forward. We will, of course, be making forward-looking statements. I leave you to peruse this at your leisure. Yeah, let's dive into the quarter. Thanks, Charles.
Yeah, thank you very much, Stephen. For those who see, Stephen and I are traveling, so it's nice to be sitting in the same room giving the presentation. I think it's a very strong quarter for us as a year. It sets us up for our long-term goal of becoming a 500,000 ounce a year producer, something that's our long-stated ambition as a company. And if you sort of look at we'll go through the production profile from the Colorada and San Agustin last year, but I think big picture, it's delivering on what we laid out as a strategy. It's using the production of our existing assets to bring forward more production at higher margins, and that's Ana Paula and Cerro del Gallo coming along behind. And so if we look back for the full calendar year, we were in the middle of our guidance range and in the middle of our cost range. Something I'm particularly proud of what the team was able to deliver, given that we were taking on new assets. And so that production number was just over 34,000 gold equivalent ounces of gold in the calendar year at a $1,541 cash cost, which read through to a $2,028 all-in sustaining costs. Above and beyond that, we restarted the La Colorada mine at the beginning of the year. With the permit to San Agustin, we were able to restart San Agustin at the end of last year. We completed 5 technical reports, which I think went a long way from a share price perspective in showing the value of the portfolio. We're able to receive a number of key deliverables in terms of operating expansion permits. And sort of more fundamentally, we just built that solid operating base and experience that we can grow from in 2025. Vitalina, I'll hand over to you to talk through the operating results.
Thank you. So as you can see on this chart, since acquisition on November 7th, 2024, our production has been fairly steady. And this was a combination of La Colorada releaching activities as well as the mining of the junkyard. And the releaching activities performed at San Agustin, which exceeded our expectations. And we restarted mining at San Agustin in Q4 of 2025. So overall, in calendar 2025, we produced 34,098 gold equivalent ounces. And since acquisition on November 7th, 2024, we generated $65.9 million in operating mine earnings. And all of this with our costs remaining below our 2025 budget. Next slide, please. As Stephen mentioned, late in 2025, we changed our year-end from March 31st to December 31st to align better with our operations as well as with our peers. So all of the information presented here is for the 9-month period, being April 1st to December 31st, 2025. So in that period, we generated $91.8 million in revenue and $47.4 million in mine operating earnings. We also had net income of $12.4 million, which is 4 cents per share, considering that $13.4 million of cash was spent on what came from our operating cash flow, and we spent just over $13 million in our exploration activities. Our free cash flow, being operating cash flow less investing activities, was $8.1 million. And we had cash balance of $40.6 million, which was an increase of $13 million from previous year end to March 31st. And we continue with no debt. And back to Charles.
Perfect. Now, I think the key there from my perspective is that as well as committing to those exploration programs and the development expenditure at Ana Paula, we were still able to grow our cash balance quarter on quarter, I think speaking to the strength of performance. And what that set us up looking forward to 2026 is an approximate 60% increase in our production year on year. That's an updated guidance of 50 to 55,000 ounces of gold for the year, fairly evenly spread between the two operating assets. And we've been able to hold our costs at the AISC level, similarly over year for our guidance. So we're forecasting those 50 to 55,000 ounces of gold to be produced at a between 2025 and 2125 gold price. So I think that's a really nice step forward, and we think even next year beyond that, we might be able to increase our production profile again. But if we look back now, we'll hand over to you, Greg, to give an update on an asset-by-asset performance basis.
Okay, thanks, Charles. Yeah, so the quarter, the very little change in the fourth quarter from the third quarter. We stacked a little bit lower tonnage and a little bit lower grade as we were working our way through the last of the stockpile material. And we started to see a bit more silver production as we're kind of focusing more on secondary leaching. So looking forward at La Colorada this year, we expect the majority of our production to kind of, I mean, we will have the tail end of the production from the ore that was stacked at the end of last year, and what we've stacked through the early part of this year. We lose the deck there, Charles. So we'll have that tail end of the production, and we're doing a lot of injection leaching on the leach pad. So the almost all of our production for next year is coming from residual at La Colorada. We expect to start stripping the Veta Madre pit in July. So you want to go to the next slide, Charles? So this is show the pit on the far right-hand side of that image is the old Veta Madre pit, and so our next phase of mining will be there. We have all the permits we need to start mining that, but with the higher gold price and some of the drilling that we did, we saw an opportunity to expand that pit. And it was enough of a change that we felt like we needed to redo the. Also, I guess aside from the change in the pit size, we learned a few things as we were doing the technical report on Crestone. So we decided to go back and do a little bit more geotech work on that pit before we start mining. So our schedule has us starting that in July.
Yeah, I think that's a key focus going forward, Greg, for La Colorada. So with the permit that we received late last year, we had the ability to restart Veta Madre, but we recognize there's something in the order of, at the moment, 28,000 additional ounces that could come into a larger pit, and we're doing a drilling that might lead to additional ounces above and beyond that, as well as then the modified geotechnical design required to do that. So the intention is to restart stripping and active open pit mining in July 26, and the bulk of the 27 production from La Colorada will come from the Veta Madre pit on the back of that. I think the team's done an excellent job of finding production outside of these pits that have given us the cash flow to be able to fund that expansion internally, which I think is a significant de-risk from a shareholder perspective in terms of equity needs and equity uses. Being able to start with very low capex, very profitable production from stockpiles and injection leaching, using that to fund the stripping and increasing the production profile from La Colorada. So the focus right now from an exploration perspective is in and under the Veta Madre pit. We see that potential that I touched on to expand resources further. And then in the second half of the year, we're going to move more out to the brownfield environment. I've been on record saying I think La Colorada is one of the most immature brownfields environments we've seen. There's almost no drilling outside of that main trend of 3 pits. And so we look forward to drilling after having worked up some of those step-out targets in the second half of this year. For those who are sort of new to Heliostar. We've already grown it from care and maintenance to a 6-year mine life. I'm confident there's a lot more potential with open resources and near infrastructure targets to test at the project. On to San Agustin, Greg.
Okay. And so San Agustin is that you recall we didn't put any ore on the pad in 2025 at San Agustin, so it was our production was all from secondary leaching. We had planned to start mining this pushback that we're mining now in the fourth quarter of the year, for reasons not related to any technical issues that was delayed, that startup. So we started mining it in December, and got a little bit of ore on the pad, but we didn't really see any production in December from the new production. So since that time, the operations in both the pit and the crushing circuit and the stacking circuit have leveled out, and I think we're outperforming the reserve model or the reconciliation is outperforming the exploration model so far, by a significant amount, and the crushing circuit we're able to get the planned number of recoverable ounces up on the pad, so we don't expect any surprises through the year. So Charles, I'll hand it back over to you for.
I think you're right. I think second half of Q1, Q2, it sets us up for strong performance at San Agustin, which is pleasing. We also recently put out last week the first drill results from San Agustin. So we kept that discipline that until we were able to receive permits to expand the pit, that we hadn't invested in the future of the mine. But as soon as we got those, we obviously looked to extending that mine life. It's generating significant operating cash flow for us. And so every quarter, every year of additional production is very meaningful for us ahead of Ana Paula. And so the main area that we stepped out on and from significance is the corner expansion zone that you can see in the graphic. We got interesting results from all three areas, but where we're particularly excited is seeing that trend of mineralization continue beyond the reserve boundary. Widespread 20 to 50 meter intercepts at sort of 0.1 to 0.6 grams per ton gold equivalent. Similar grades that we're currently mining in the corner reserve area in that pushback that Greg referred to. So it significantly increased the potential of mine life expansion at San Agustin. We've got 2 rigs turning now, and we've got 9 across the company operating, 2 of them here at San Agustin, where we've increased the program to 15 to 18,000 meters this year, focused on predominantly on the oxide expansion potential. The idea is to spend $9.75 million US here to put out an updated resource that we can turn into reserve that we can use to have an expansion of the mine life next year, should all things work out as we'd hope they do. But very, very pleasing results from San Agustin.
And the strategy remains the same, that we expect the cash flow from the previous 2 projects, or the previous 2 mines, to fund the equity component of the Ana Paula project. As you can see in our results, the financial support that they're able to provide is very significant, and we're on track, if not ahead of track from a cash flow perspective, to be able to put that money towards Ana Paula. 2026 will be a big year for Ana Paula, following on the results of the PEA that we put out late last year, showing the economics of the underground project for the first time, 100,000 ounces a year at a $1,000 all-in sustaining cost. We're now advancing this project from the PEA level directly into the feasibility study level, with all the associated technical work going on to support that in the background, I'll say, which we're likely to give an update on midway through the year. In addition to that, we've also wrapped up a 20,000 meter drill program that was started last year, to be able to continue to primarily upgrade the inferred material, and to be able to include it in the feasibility study, but also on some step out success of adding an additional 10,000 meters planned for 2026 to test mineralization near planned underground infrastructure. So things that will likely not make it into the FS mine plan, but will make it into a subsequent mine plan as we operate Ana Paula going forward. The other significant portion of the Ana Paula project to look forward to this year is the restart of the decline advancement. This is a 400-meter decline that was extended by a previous operator. The work stopped when they were acquired for a different asset. Now that we've got certainty of cash flow from primarily San Agustin this year, but also aided by La Colorada, we intend to spend the money to advance that into the deposit, allowing us to both de-risk the deposit and establish an underground drill platform to continue to test down dip extensions of the high-grade mineral system. We're especially excited about the ability to do that given our recent down dip drill results. We hit 25 meters at 8 grams a ton, about 70 meters below the lowest planned stope in the PEA mine plan. We've drilled additional holes from surface. Of course, it gets harder and harder to go deeper from surface, so that's where the underground platform will really allow us to tackle that in a major way. In addition to expanding the, call it, mine plan mineralization, we're also looking for that potential contact skarn, just like is found at Los Filos or the Morelos complex for Torex, just in the same neighborhood. And that underground drill platform will really give us the ability to tackle that in a meaningful way. So it's more of a 2027 piece to our story, but stay tuned to see if we've got a true tier 1 deposit below what will be one of the most profitable mines on a per ounce basis that we're bringing into production, starting with construction starting next year.
And so I think from a corporate perspective, the business is operating well. We're seeing incredible margin, even with the recent pullback in the Iran war. It's an incredible time to be growing a gold business. And 2025, I think, was a story of the assets performing and getting them set up in such a way that they can deliver the cash flow that we want for our growth profile. Ana Paula, as Stephen was describing, remains the premier growth project in our portfolio and one of the best growth options, I think, in the marketplace. So that becomes the main focus. We did today, however, add another portfolio asset to the company. We announced today that we're acquiring the Goldstrike project of Liberty Gold. It's approximately 1 million ounce deposit in Utah that we're looking forward to providing some additional technical disclosure on as soon as we're able to in the next couple of days. What we liked about it was, we're paying approximately $75 an ounce in a staged structure, which sort of fits the Heliostar model quite well. It's an advanced project. We think there's a pathway into advancing the historic PEA and securing the water that would be needed to make it a production project. We think that there's a number of opportunities to the upside. It's a very large Carlin footprint that's seen very little deeper drilling. The classic target of these Carlin systems is the Paleozoic rocks that really haven't been touched in this system. So we think that provides nice exploration upside and sort of fits our view of looking for assets with potential. There's also an intriguing critical mineral aspect. There's some very high-grade antimony results in a former small-scale antimony mine area known as Antimony Ridge. We plan to follow up on those and look for the potential of those. Those grab sample results, while selective, are indicative of very high antimony grades on the project. And we see it as having two options for us as a company. One, it's a potential sort of medium-term development opportunity behind Ana Paula and Cerro del Gallo that we're able to buy of Liberty Gold as they focus on their Black Pine project. The other one is we will review the potential to either spin out or sell our US portfolio as a way of generating additional cash flow for Ana Paula. So we love having optionality as a company. We think that either as a longer-term development project or as a chance to generate cash flow from Ana Paula, there's a lot of potential in the Goldstrike project for us as a company. So that was the reason that we entered into the transaction. We're paying $12.5 million on signing, and all the rest is on staged either time cash payments or milestones that will deliver as an asset, totaling $72.5 million for the acquisition price. So what that means for us as a company going forward, I kind of think our story breaks down in two parts. I think we're a very focused company for the first half, engineering process in the second half of the year. And the reason I saw that Stephen referred to, we're looking forward to getting more of those. We demonstrated that the drill bits have San Agustin, and we look forward to following those drill results up. And then, as I at the top, we've been drilling for what's potentially pit at Veta Madre, or what's potentially even more in our pit at Veta Madre. And so, if we are able to have success there, we look forward to putting together more results from La Colorada. Then in the second half of the year, it moves more to de-risking the company in engineering progress at Ana Paula, starting the decline at Ana Paula, starting the stripping of the Veta Madre pit at La Colorada. Some big steps that I think will show, and really, if you think what's holding back our valuation apart from, swings in the market for macro events, I think we're sort of halfway between a developer valuation and a producer valuation. And as we show that steady state open pit mining at La Colorada and de-risking Ana Paula, I think we move to that higher valuation. We also look forward to continuing to deliver our quarter in, quarter out production. We're on track for our guidance for Q1 this quarter, and I think Greg touched on the potential for a stronger quarter next quarter at San Agustin on the back of the performance that we've seen. So the company continues to deliver on its base operations. We continue to build our cash flow for Ana Paula, and we remain aggressive in terms of potential to grow the company or use the drill bit to grow our resource bases. We think there's a tremendous opportunity in the Heliostar share price at the moment, and we look forward to delivering on those goals that I think will further grow that share price. Now I'm going to pause and take a moment to answer questions. I'll stop sharing my screen a second so we can read those questions. So feel free to type in, and we'll look to answer any of those questions we can over the next 10 or 15 minutes.
Should be a Q&A box on the webinar here. Please submit your questions, and we'll try and get through as we're able to. Okay, I'm going to give me just 1 second to compile them here. We've got some questions around stockpile processing at La Colorada. Primarily in terms of the other old stockpile that was a potential opportunity for us, as well as the truck shop stockpile. So maybe
I'll take the stop and then pass over to Greg. So yeah, as I touched on, our strategy was trying to find the lowest capex pathways to production at La Colorada, and we had ultimately considerable success. To the point that $66 million has been made in mine operating earnings since we acquired these assets from what you call non-reserve ounces. That is the stockpiles, that is the re-leaching and the injection leaching. And so specifically to those questions, we've now exhausted the junkyard stockpile that provided the bulk of our production last year. We're mining the truck shop stockpile and just coming to the end of that as we speak. We ended up never putting a resource or reserve out. We just put that through our production profile. We tested another stockpile called the El Dorado waste dump that we thought might be a stockpile last year. That doesn't, at these gold prices, look like it has the grades to displace the injection leaching. And Greg, I'll hand over to you to discuss what we're doing with probably maximizing production out of the leach pad at La Colorada. I think quite a few ounces this year are going to come from it, and it's a quite innovative work led by yourself and the team.
Yeah, well, I said that. Yeah, as far as stockpiles, we have the what we call the truck shop stockpile that may, there's definitely some good pods of material in that. It won't be as simple as the junkyard. We can't just mine everything and throw it through the crusher. We'll have to sort through it a little bit. So that's one opportunity. But the bigger opportunity, I think, at La Colorada is this injection leaching, and so what we found is it's a very well behaved heap. It drains, if anything, almost too well. So what we found, there's a lot of electrum in the leach pad that never leached, and it's difficult to get if you're just adding solution at the top, it's difficult to get enough cyanide down in there to get that material. So with this injection, we're finding that we're able to pick up a lot of residual gold and some silver along with it. And so we're just going to systematically go through the leach pad this year, and that's what we're anticipating is going to provide the bulk of our production.
Yeah, go ahead.
Oh, I was just gonna say, I think it just speaks to something that, the team is creative technically, strong technically, and evaluate what we see as potential opportunities to then narrow them down quickly to actionable paths forward. And I think that's exactly what Greg's described when we acquired the asset. Saw all these potentials. We've tested all of them and then been able to optimize what makes the most sense for us to generate the most cash flow with the least amount of initial capex spend to get there, and that the injection leaching stood out as the opportunity to do that at the forefront. Sorry.
Yeah, so there's a couple of questions here themed around safety and security in Mexico. Obviously, it's been topical in the quarter. For off the top, we haven't had to change or modify our operations, across our different assets, the producing mines or the development assets. We obviously recognize there's been some significant, if one of the questions specifically referenced what's happened at Vizsla, very sad event that we believe to be geographically constrained and at this stage unlikely to have an effect on our operations. More broadly, we're fortunate that the events that have happened, the government/army moving against cartel members has not happened in areas that we operate. We've been able to continue to operate safely. We monitor the situation very closely, given that we've got operating gold mines. It's obviously a negative for sentiment in Mexico. We would like and wish to see a safer operating environment in Mexico, but we see a safe enough operating environment that we've been able to get on and continue our business. We continue to monitor that daily as required.
Great. Thank you, Charles. Question here, just on the general strategy, when do you think you'll be able to get to the 300,000 ounces per year run rate?
I think that's Cerro del Gallo coming online behind Ana Paula. So everything we're doing is targeting Ana Paula as much as possible online in late 2028. So therefore, a timeline would be around 2030 for us to bring Cerro del Gallo behind that. The intention's always been to use the cash flow from Cerro del Gallo to fund the development of cash flow from Ana Paula to then subsequently fund the development of Cerro del Gallo. So we've always wanted to be 500,000 ounces at the end of this decade. We think we can get 300,000 of those organically with Cerro del Gallo coming online at the very end of the decade.
Great. Thank you, Charles. Got one more question here on our current cash position, which I'm not sure we're able to comment on publicly, but Vitalina, maybe just addressing the warrant exercise, because this is something that has been notable in the stock and a notable event over the last couple of months that we've now put behind us and did bring in some money. So maybe if you can talk generally about the cash position end of the year and then what we've seen from the warrants subsequently.
Yeah, so we've had about 6.6 million over the last little bit, both from warrants and stock option exercises. And without giving the exact cash position, we're still roughly around the same position of 40 million that we were at year end.
Thus.
Thank you, Vitalina. At our end, I think that wraps up all the significant questions. For those, if you've still got questions that we haven't been able to answer, please reach out to the company through the website or directly to our IR manager, Rob Gray. Thank you all very much for your time and for attending. And with that, we'll draw our quarterly presentation to a close. Thank you very much.